What is going on? Welcome back to the channel. So today we're going to talk to you about Virgin Galactic. I want to go over some of the data points, break it down on what's moving it, and go over everything else you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So it is up 10.12%, 325 the low, 379 the high, and 5.5 million shares being traded. 4.6 is the average. So we are seeing a lot of volatility. Ultimately, still a lot of fear in the market. You can kind of see just generally from my watch list, a lot of speculative stocks are not necessarily doing that well, and a lot of that has to do with the fears associated to the shutdown and kind of the repercussions of that. So generally the big catalyst for the broader market was going to be rate cuts, but because of the whole shutdown, that has gone down quite a lot. So right now there is a 45.9% likelihood of a 25 basis point cut. This is down from about 94.4 1 month ago. So not necessarily the best, but in Virgin's case, for those of you that have been kind of tuning into my videos on Virgin Galactic, I mentioned that their upcoming catalyst was going to be their earnings, because the bar was set so low for them they could easily beat, and lo and behold, that's exactly what did happen. So they did have a kind of a triple beat. So it's unfortunate that today is a crappy market day, because you can only imagine how high it would have went. But earnings per share, they did beat by a significant amount. Revenue, they did beat by 50,000. They also gave good future guidance. So for Q4, they are anticipating, I think it mentioned, what was it, 300 million, something like that. So definitely good stuff for that. And then they also gave a little bit more clarity and timelines for 2026. So I'm going to do a more of a in-depth type of video for their earnings. I'll do that for this weekend, so make sure you guys subscribe and hit that thumbs up. But nonetheless, what I will also do is I'll play this. It's 10 minutes long. I like to use Seeking Alpha on a side note. It has a lot of good information. That way you don't have to dig deep anywhere, and it's all in one location. But plus they do summarize a lot of good earnings. So if you're looking for this, I have a 7-day free trial for Seeking Alpha on a side note. I'll put that in the description below and also the comments, but stay tuned for the end. I'll play this, like I said, 10 minutes for those of you that are interested. But shorts, let's break that down. So shorts are increasing at the time of doing this video, 225,000, 21.34% of the free floats being shorted, works to be 12.25 million shares. So shorts clearly did feel that they were going to flop on their earnings. This is why they had kind of doubled down and tripled down since then. So bottom was about October the 15th. In fact, during the intraday so far, we see about, if it somehow loads, about 1 million shares increasing. So that was the peak. So going back over here for a second, 5.5 million shares being traded. Shorts make up for a good chunk of the volume, and this is something I've brought up quite frequently in previous videos. So I think Virgin Galactic is doing pretty a-okay given the circumstances. Looking at the options, 284,000 in calls, 118,000 in puts, and then 61% of all the options being done are bullish in nature. So it looks like about $5 and above is anticipated for next week. So definitely a good amount of optimism, and a nice reversal is on the table. Bears are anticipating for it to be sub 350. So the fact that where we are at, there's definitely a lot more upside. Still, despite the good day, as I mentioned, shorts make up for a good chunk of the volume, as well as algorithmic trading, most likely feeding off of the bullish earnings. You aren't really seeing any institutions buying Virgin Galactic. So no transactions on the secondary market. You do have quite a few. Actually, sorry, this is Beyond Meat. So one transaction on the dark pool, and so given how active shorts are, it is fair to assume that it's kind of linked to them. Aside from all of that fun stuff on the actual chart itself, so I think leading into their earnings, things weren't that great. You can kind of see just it's been extremely volatile, like a bunch of moving averages kind of all over the place. At the time of doing this video, it is above the 10-day moving average, kind of bounced off of that 50. 50 is a extremely big deal for Virgin Galactic. So I think the market's going through a certain level of consolidation right now. The market closes in about 15 minutes on a side note. So most likely we're going to see a little bit of a pullback, because there's still a lot of fear in the market. But today it did successfully get above that 200-day moving average, as well as 10. So if it's able to hold that going into next week. I think that should be a pretty good thing. On a side note, quickly going over here for a second, only 2 ratings so far have come out. Most likely the rest will be posted over the weekend, and actually kind of the market will digest it on Monday. But you did get a 450 buy by TD Cowen, so that actually didn't change, so they kept it at 450. Oliver, on a side note, has a 53% success rating. Then you had Michael, 61% success rating from Key Bank. I've never really heard of that firm, but hold rating. So as a consensus, 358 is that price target, representing a 2.19% downside. So all in all, as I've mentioned, I do believe that Virgin is just a very still speculative play, but their big thing is going to be 2026. And I think in general, Virgin Galactic has done fairly well given the circumstances. And normally, whenever any other stock that has about 60% of the overall volume attributed to shorts, and they're actually like not 99% in the red, I think that's definitely a big accomplishment. So let me know your general thoughts. Like I said, over the weekend I'll do a little bit more of a deeper dive, but I'll quickly play this. So for those of you that are curious or interested in all that, one final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto. Put out daily, day trades, numerous swing trades. Worthwhile to pop over there and check that out. With all that said, appreciate all of you watching.
Earnings call insights. Virgin Galactic Holdings, SPCE Q3 2025 management view. 𝗪𝗧𝗏𝗧𝗛, CEO, highlighted important progress updates on our spaceship program and a company-wide pivot toward operational readiness as we prepare to enter 2026. He stated, "We remain full steam ahead, bringing our new spaceship into service. We continue to make excellent progress across the many elements of the program, and the number of outstanding items on our production checklist continues to decline with each passing week as we knock out the work." 𝗪𝗧𝗏𝗧𝗛 also announced that expected dates for flight test and our first spaceflight remain essentially unchanged from our prior forecast, with our flight test program expected to begin in Q3 and our first spaceflight in Q4 of 2026. The CEO reported the resolution of supply chain complexity for the forward fuselage, noting the lower skin arrived well within the time extension we had expected, which is great news. He added, "We are currently forecasting the first fuselage to wrap up just a bit earlier than we expected last quarter." 𝗪𝗧𝗏𝗧𝗛 shared that by mid-December, we expect to have approximately 90% of the carbon and metallic parts for the first ship in hand, and emphasized a new focus on commercial readiness, including hiring a chief growth officer and preparing for a tranche of sales opportunities in Q1 2026. The company is planning for a ramp to 125 space missions per year with its first 2 spaceships, supported by upgrades to the Eve launch vehicle, which is now capable of flying spaceships on successive days, and we're planning to ramp to an average availability of 3 to 4 flights a week. Douglas Ahrens, CFO, stated, "Revenue in the third quarter was approximately $400,000 attributable to future astronaut access fees. Total operating expenses for the third quarter decreased 19% to $67 million, compared to $82 million in the prior year period. Net loss improved by 15% to $64 million, compared to $75 million in the prior year period." Ahrens added, "We ended the third quarter with $424 million in cash equivalents, and marketable securities. During the quarter, we generated $23 million in gross proceeds through our ATN equity offering program." Outlook. The company expects revenue for the fourth quarter of 2025 to be approximately $300,000, primarily related to astronaut access fees. Forecasted free cash flow for Q4 2025 is expected to be between -$90 million and $100 million, consistent with prior guidance. Spending is projected to continue decreasing through Q3 2026, before rising with the start of commercial service in Q4 2026. 𝗪𝗧𝗏𝗧𝗛 affirmed, "We remain on track to open in Q1 of 2026, our first tranche of sales opportunities for future space missions." Management reiterated the long-term economic model. With the initial fleet of our 2 spaceships capable of an anticipated 125 flights per year, in a steady state, and using our most recent ticket price of $600,000 per seat, we expect to generate approximately $450 million in annual revenue at high margins and yield approximately $100 million in adjusted EBITDA. Financial results. Revenue in Q3 2025 was $400,000 from future astronaut access fees. Total operating expenses decreased to $67 million from $82 million in the prior year period. Net loss improved to $64 million from $75 million in the prior year. Adjusted EBITDA improved to negative $53 million from negative $59 million in the prior year period. Free cash flow was negative $108 million, representing an 8% improvement compared to the prior year period. Capital expenditures for Q3 were $51 million, up from $39 million in the prior year period. Property, plant, and equipment at quarter end was $350 million, a 67% increase from the end of 2024. Q&A. Greg Conrad, Jefferies asked about the size and pricing of the first sales tranche. 𝗪𝗧𝗏 replied, "Price, we haven't said it publicly, but I continue to expect it will be higher than $600,000. We'll put a quantity out. We'll sell that at a price and do that assessment and then reset the price for the next tranche, and I think we'll do that." Greg Conrad, Jefferies, asked about ramp and flight cadence for 2027. 𝗪𝗧𝗏 explained, "We will choose to ramp our operations in a prudent fashion, so we'll probably start with 1 flight a week, and then we'll move to 2 flights a week, and then we'll move up to 3 flights a week." Oliver Chen, TD Cowen, asked about risk factors for 2026 flight test and commercial launch, implications of oxidizer tank qualification, and avionics opportunity. 𝗪𝗧𝗏 detailed production risks, emphasizing that until we've got them in our hands in the spaceship factory, we won't have all of that risk removed, but we feel comfortable enough to say one way or the other, we still expect our first space flight in Q4 of next year. He also said, "The cost assumptions that we put into that model more than a year ago now are really kind of validating as we move forward with things like this tank." Michael Leshok. KeyBank asked about differentiators for research flights and market size. 𝗪𝗧𝗏 cited the ability to fly with experiments, quality of microgravity, and frequency as key advantages. Louis Raffetto, Wolf Research, inquired about revenue from the Purdue research mission and cash flow. 𝗪𝗧𝗏 stated, "No reason you should expect that to be different from our last stated pricing." Ahrens added, "We would be able to get to these flight rates that get us to the cash flow positivity within 2 to 3 months after the start of commercial service." Sentiment analysis analysts focused on sales pricing, production risks, cash flow trajectory, and capability differentiation. With a generally neutral to slightly positive tone, questions probed risk management and financial discipline without overt skepticism. Management maintained a confident and measured tone in prepared remarks and Q&A. 𝗪𝗧𝗏 and Ahrens repeatedly affirmed operational progress and financial discipline, with statements like, "We remain full steam ahead, and we feel good and confident in our Q3 start of flight test." Compared to the previous quarter, analysts displayed a similar level of cautious optimism, while management's tone shifted from technical explanations of production challenges to emphasizing risk mitigation and commercial readiness. Quarter-over-quarter comparison, flight test and commercial launch timelines remain unchanged from last quarter, with Q3 2026 for flight test and Q4 2026 for first spaceflight. Guidance language has become more specific, referencing calendar quarters instead of seasons for clarity. The previous quarter emphasized resolving composite part production issues and engineering team restructuring, while the current call focused on the successful arrival of key fuselage parts, ongoing production ramp, and commercial readiness initiatives. Analysts continued to focus on cash flow, production ramp, and sales strategy, with recurring questions about spending levels and ticket pricing. Management's confidence in achieving steady-state flight rates and commercial milestones remains strong, supported by detailed operational updates. Risks and concerns. Production risks remain centered on the timely delivery and assembly of key composite parts, particularly the fuselage. 𝗪𝗧𝗡 noted. Until we've got them in our hands in the spaceship factory, we won't have all of that risk removed. Weather and supply chain variability are acknowledged as factors that could impact flight cadence. But management cited operational flexibility and the choice of New Mexico for its favorable conditions. The ability to shift from R&D to capital investment and efficiently manage cash burn is highlighted as critical for achieving commercial service and positive cash flow. Final takeaway. Virgin Galactic's management underscored the company's progress toward operational readiness, with major production milestones achieved and a clear plan to ramp up commercial service in 2026. The company remains focused on delivering its first tranche of sales in Q1 2026, targeting 125 annual flights with its initial fleet, and leveraging improvements in manufacturing and vehicle capability to support high-margin, scalable growth. Management emphasized strong cash discipline, operational flexibility, and confidence in meeting its timeline for commercial launches and revenue expansion.